they pay zero taxes on that $10,000. And that $10,000 is 100% deductible on your business return. Hey, I'm Nate with Cookie Finance. I've been a CPA for over 12 years, and Cookie Finance, we are a tax and accounting firm for content creators. And working with hundreds of creators, we get lots of questions from creators all the time. So in this video, we want to go through the most frequently asked questions from creators and make sure that you have a good understanding of all of these topics. So one of the common questions is, do I need to report my income for my content creation if I made less than $600? Sometimes I've seen on TikTok $1,000 or $5,000. And the answer is yes. You have to report your income no matter how much money you made. So even if you made $1 from your content creation, TikTok shop, you made $1 from one sale, you still need to report every single dollar of income on your tax return. Now, where you might hear that $600 is if you made less than $600 from a brand or a platform, then they will not send you a 1099 at the end of the year, but that doesn't mean you shouldn't report that income. You should still report that income no matter how much money you make, even if you don't get a 1099. So no matter how much money you make, you need to report every single dollar you earn from content creation on your tax return. Another question we get is, should I form my LLC in a state like Wyoming or Nevada, a state that has no income tax, so I can save money in taxes? And this is a really big misconception with people. Let's say you live in California, which has really high taxes, and they think, oh, I should form my LLC in Wyoming, because there's lots of TikToks out there that kind of allude to the fact that if you form your LLC in Wyoming, a state that has no income taxes, that then you pay no income taxes on that business income. The reality is that is not how it works. So an LLC is what's called a pass-through entity. What that means is all of the income that you receive from your LLC or from your business passes through the business and onto your personal tax return. You report that income on your personal tax return, and then you pay taxes from your personal tax return. So if you live in California, if your LLC is in Wyoming, it doesn't matter where it's at, it flows through the LLC and onto your California personal tax return. So there is zero tax savings by setting up your LLC in Wyoming as compared to living in California. Now, there are some legitimate reasons why you might want to set up in Wyoming for privacy, a cheaper cost to have your LLC, but there's no tax savings by having it in Wyoming. You still owe income taxes if you live in a state like California, Oregon, Colorado, whatever it might be. There's no tax savings by having it in Wyoming or Nevada or a place like that. One confusing thing as you're looking for professional help with your finances is what's the difference between a bookkeeper and a CPA? And there's actually a really, really big difference between the two of them. They both work together to help you, but they both do different things. So the bookkeeper, their whole job is they take all of your income, all of your expenses, they categorize it for you. They are finding all of those deductions. They're making your financials look nice and pretty. You know, if your income is mixed with your personal, so you have personal expenses and business expenses all mixed together, they're the ones who are pulling that out all apart and making sure that you have accurate financials to report on your tax return. So that's your bookkeeper. Your CPA or your tax preparer, they're the ones who are actually going through and preparing your tax return. They're the ones who are helping you with tax strategy, tax planning, optimizing those taxes. That's what the CPA or tax preparer is doing. So you have your tax person and you have your bookkeeper. They work together to help you organize your financials and then optimize it for taxes. Now, a CPA is the most specialized within the tax realm. So you have a tax preparer and a CPA. For most content creators, you don't need a full-fledged CPA. They're usually really expensive. Typically, they're working on really complex type of matters. And for most creators, you don't need something that's really, really complex. You can get by with a really seasoned, talented tax preparer. They can provide the same level of service, same strategy as a CPA, but for a lot less money. Typically, a CPA, you would need them for really, really, really complex tax matters, or if you're a giant company and you need a really complicated tax return, that's when you need a CPA. Most content creators that we work with, just a good, solid tax preparer paired with a bookkeeper, that will get you everything you need for a really, really long time. So at Cookie Finance, we have both of those on our staff. So we have bookkeepers and tax associates working together for all of our clients. So we do everything in-house. We do both the bookkeeping and the tax. That way you don't have to go to two separate people. It makes it a lot easier for you. So wherever you go, it's best if you can find a place that can do both of those things in the same place, so you don't have to go to two different companies working on your finances. It makes it really inefficient for you and a lot easier to miss things along the way. One thing we hear a lot from creators as we're walking through deductions is, well, my entire life is my content. So does that mean I can write off my entire life? And the answer is no, you can't write off your entire life. That'd be amazing if you could, but unfortunately, you can't write off your entire life. There are limits, and you want to be smart about what you are deducting. The IRS has two tests that they look for when deciding if something is a legitimate business expense or not. The first thing they want to make sure is reasonable. So, is it reasonable for you to go buy a $50 million yacht? Like, is that reasonable? Probably not. So that's probably not going to be deductible. And the second thing, is it an ordinary expense? So you basically need to spend that money. It's an ordinary part of doing business. So if it's not reasonable and ordinary, then the IRS is going to say, sorry, that is not deductible. Now, the tax code is very gray. There is a lot of interpretation that we need to do in the tax code, but we go by those two principles, ordinary and reasonable. Now, for a content creator, a lot of the things you are doing in your day-to-day life can be deductible. Your trips, meals, certain clothing, certain personal items, some of those things can definitely be deductible. A lot of those things can be deductible. But it's a little bit disingenuous to say my entire life is my content. Every single last little bit is part of the business. I can guarantee you if you do that, you will get audited. And I can guarantee you, you are going to lose on a lot of those points you're trying to argue with the IRS. So we try to be very pragmatic with our creators. We try to find every last little deduction we can possibly find without going so far that you get yourself in trouble or you raise red flags with the IRS. So let's say that you have kids. One common question is, does it make sense? Is it tax advantageous to put my kids on payroll? And the answer is 100% yes. It is beneficial to put your kids on payroll if they actually contribute to the business. So this is another one of those areas where the IRS knows that putting kids on payroll is a great tax strategy. They just don't want you to abuse that. And so what they say is, if you put kids on payroll, you need to prove that the kid actually contributed to the business in some way, whether they were a significant part of your content, they're helping you edit videos, things like that. They're helping you set up shoots, whatever it might be, right? They are actually contributing to the business and you are paying them market wage. So if your kid every once in a while helps you set up your video shoots and you pay them $5,000 an hour, well, that's definitely not market wage, and that's going to look really weird when you go to file your tax returns. So the IRS wants those two standards. It needs to be actual work that they're performing, whatever that work might be for your business. And the second one is that it needs to be a reasonable wage. So we recommend, if your children are part of your content, if they are part of the brand, if they're helping you with the business, to definitely put them on payroll. Now, why that's beneficial is, let's say you have a 14-year-old who is helping you get things ready. They're helping you edit. They're helping you prepare things, getting things set up, organized, whatever. And throughout the year, you pay them $10,000. Well, if you pay them less than $15,000 in 2025, that kid owes zero taxes on that income they earned. So if they earn $10,000, they pay zero taxes on that $10,000. And that $10,000 is 100% deductible on your tax return, on your business return. So you pay less in taxes and your kid pays no taxes at all. Now, a lot of parents will then take that $10,000, they will either give it to their kid, if the kid's responsible, or sometimes they'll invest it in a college savings account, into maybe a retirement account, something to help that kid save for the future. So it's definitely tax advantageous to pay your kids as long as it's reasonable and the kid's actually doing something as part of the business. Now, for the spouse, that's a different story. The spouse, it's almost never tax advantageous to pay your spouse. In fact, a lot of times it can actually hurt you and you actually pay more in taxes by paying your spouse. So paying kids, great tax strategy. Spouse, it depends, and we'll tackle that in a different video. There are a ton more questions. We're going to be making more of these videos coming soon. If you have any questions you would like us to answer, post them in the comments. We'll put them in our future videos. And if you have any questions that you'd like to ask us one-on-one, please go to our website, cookiefinance.co, book a consultation. It's totally free. You can talk with one of our accounting advisors, spend 20-30 minutes answering any and all questions you have about taxes, bookkeeping, any of these things. We'd be happy to answer them for you. Put any questions in the comments and we'll definitely get to them in a future video.
Tax, bookkeeping, and accounting services exclusively for content creators and influencers. That's Cookie Finance.